Hello, my name is Nick Whitten and I head up the UK Living Research team for JLL. I'm going to give a brief market overview now about how Covid-19 has affected the UK residential market and crucially how we expect it to affect the market going forward. If we turn to my first slide, first of all, we can look at what effect there has been on the economy in the UK. And we know that the measures that the government have introduced have been really significant in trying to reduce insolvencies, reduce or avoid redundancies, avoid evictions, and ultimately avoid a fully baked financial crisis. And there's been some success there, and they've been great in trying to minimise the effects on the economy. But if we try to consider what kind of recovery we might be facing, the diagram down the bottom of my chart there allows us to consider what kind of recovery we might now be facing. The great hope was for a V-shaped recovery, but we now know that we've moved into a second quarter of some form of containment on our lives and how we can go about our lives. And we also know that arguably the policy effectiveness in reducing fatalities in the UK has been partially effective at best, given that the UK has had one of the highest fatality rates in the world from Covid-19. So we're looking at something like a U-shaped recovery, and the longer the containment period goes on, we may be looking like a U-L-shaped recovery. In terms of the housing market, we turn to the next slide, it's really important to also consider the history lessons that we look at. So this chart shows you the past 30 years in terms of house price change, marked by the red line on the chart, and annual housing transactions, marked by the black line on the chart. And we've looked at 6 major crises across this chart, and we can see that across all of those crises, there was a fall in housing transactions. But not across all of those transactions was there a fall in house prices. Only in the UK recession, towards the left-hand side of the chart, and the global financial crisis in the mid-2000s did we see a material fall in house prices. And that was because there was a significant effect on people's jobs. People lost their jobs and they became, to a certain extent, distressed in terms of their household. There was a lot of forced sellers, which dragged down house prices. Now, that isn't necessarily going to occur this time because of the measures that the government has taken to protect jobs and to protect businesses. But nonetheless, we do still expect some fall in house prices over the next short-term period for the remainder of 2020 or for 2020 as a whole. We expect transaction volumes to fall significantly to something like the level of the global financial crisis there. But house prices will fall by much less than what was seen in the global financial crisis, and crucially for a shorter period of time. But in the likes of London and prime central London, we expect a strong bounce back in price growth from 2021 onwards. So this will truly be a moment in time. If we move to the next slide and we start to look at the effect on housing starts, house building, we can see from that there was a significant drop in new housing development in the UK recession at the left-hand side of the chart, and again in the global financial crisis. And in both those instances, again, it was due to the fundamental business failures that occurred, the distress that was felt by businesses, and many small to medium-sized businesses actually went out of business in the global financial crisis, and that construction capacity was lost forever. Now, this time around, again, because of the government protection schemes, many building companies are able to survive through this, weather this storm, so to speak. But we do expect a drop off in new start activity for 2020 and indeed a slowed activity in 2021. Businesses will prioritise completions in the first instance, and that will have a knock-on effect in new housing supply. We already know we under-deliver housing in the UK, and this will be exacerbated over the coming years. So finding a new housing opportunity will be in very short supply and should not be overlooked as an opportunity if it comes along. Now, if we turn to the next slide, we can start to look at some of the reasons to be optimistic. So first of all, we talked about how we expect London to bounce back more strongly. And if we look at how London was performing going into the crisis, in the year to March 2020, house price growth in London was the strongest of all regions across the UK, just under 5% per annum. So we do expect a slight fall away, but as we say, it will be short-lived, and then we expect London to get back to growing stronger, as it was starting to do with that post-Brexit bounce that was becoming evident before Covid-19 came into effect. And if we turn to my last slide and we consider the currency opportunity that is very much becoming apparent again as a result of COVID-19. We know that sterling is considered fundamentally undervalued and has been the case since Brexit, since 2016. Now, after Brexit, sterling fell to something in the order of $1.20 to $1.30 through the period since. But there were signs that it was recovering coming into 2020 until COVID-19 occurred. But we do expect fundamentally that the currency will appreciate again and get back to something in the order of $1.40 by 2023. So something in the order of a 15% currency arbitrage over the next few years. So turning to my final slide and summarising, fundamentally we do feel that now is an excellent time to invest in UK residential, and in particular London residential, and even more so prime central London. We expect prime central London to grow the strongest. To a certain extent, it will be history repeating itself, as was the case in the global financial crisis. Strong growth. There'll be a short-term blip in values, but a stronger return in value thereafter. And if you add that to the currency gain opportunity, now is an excellent time to buy. So I hope you've enjoyed this short update. If you do want to get in contact with us, we've got the contact details there on the slide. Please do get in touch with any questions you may have. Thank you very much.